Money is an interesting concept. This piece of paper that's made up of 75% cotton and 25% linen that has been printed since 1862 is the reason behind us working odd jobs, multiple jobs, and spending days doing something a lot of us hate. It's the main reason behind us deciding whether or not it's worth us to seek medical help for a number of different ailments we might be suffering from. And it's the main reason why many of us live in fear and generate this overwhelming amount of anxiety. Money is one of the few things on the planet, no matter your interest, your passion, your favorite food, or where you come from, money will affect you and your lifestyle one way or another. It's one of the few common things that humans share that we all need. Not everyone drinks alcohol, not everyone drinks caffeine, but everyone needs money. Money for food, money for our kids, money for luxurious and fun activities. But from a contrary perspective, money is one of the few things people don't want to talk about. They don't want to talk about how they are investing, how much money they make, and their financial plans for the future. Some people are afraid of being taken advantage of. Some are embarrassed of financial mistakes, and others don't want to make friends and family jealous. In my opinion, it's really a shame that our society operates this way. Without conversations about money, lots of people from all age groups are not going to learn how they can take control of their financial futures. And even if you are one of the lucky ones, you are one of the few people that come from a place where transparency is preached. You originate from an area where it's encouraged to listen and learn rather than speak and assume. The question still remains, where should I invest it? Where can I invest this money? Where can I put this piece of paper to create more pieces of paper? No one wants to be that guy or that girl who lost a lot of money and set themselves back financially for years on end, which is what a lot of people assume will happen if they invest their money into certain asset classes. Unfortunately, what people aren't aware of is that not investing their money is the true risk here. Every single year, the value of the dollar decreases. Where $1,000 would get you in 1922 is nowhere near where $1,000 is going to get you today. If we aren't investing our money and we are leaving it in a savings account, we are not taking the most proactive approach. We are not taking action into our own hands. We are playing the game of life on hope rather than playing the game of life on ourselves. So where should I put it? I have $10,000. Where is the best place to put it? Should I invest in the stock market, real estate, bonds, gold, Dogecoin, YOLO meme stocks? This is ultimately a question you're going to have to answer for yourself. But how do you answer this question? And the answer is by researching. Every single year you hear people talking on ESPN. Tom Brady could throw for about 40 touchdowns this year. I think Devontae Adams can catch 100 balls this year. LeBron should average 27 points and 11 rebounds this year. Stop yourself. Where do these analysts get these numbers from? These analysts don't just pick these numbers out of a hat and hope they hit a bullseye. They come to these conclusions by doing research. Time out. Now, before I move forward, let me say this one more time. This is not financial advice, and I am not telling you what to do with your money. No one's ever going to care about your child or your business as much as you do, which is going to be a hard reality for some people. And the same concept applies with money. No one's going to care as much about your money as you do, whether it's a financial advisor, your mom, your dad, your best friend, whatever the case may be. No one is going to care about it as much as you do. You have to decide where the best place for your money is and where you want to park it or put it. And if you don't have the utmost conviction, maybe you shouldn't be putting it there and you have to do some more research. Okay, time in. If someone wrote me a check for $10,000 and said, Josh, invest this money in an asset class for me. And I think right now, if anyone else were in this position, they may just leave the money in cash. One, because they aren't financially literate, and two, because there is a lot of fear in the world right now. I have countless friends that are afraid of putting money into the stock market because it is too risky. What if the entire economy collapses? I also have friends who do not want to put money into real estate because the market has been so hot and it could crash at any time. But me, I would not leave this money in cash. In fact, I would invest that money in the stock market. And to me, it just seems a little obvious and more like common sense. We have seen this market selling off for so long. Pain on pain on pain. Red on red on red. People cannot check their portfolios because it hurts too much. People have sold their stocks at massive losses because of ultimate fear. For me, there's only one thing to do in a time like this. Buy. There's always something to fear in the stock market. Year in and year out, there is always a concern, whether it is inflation, an incoming recession, war, or something else. Every single time we have seen a correction in the market, every single time we have seen a stock market crash, what has been the result looking years out? What has been the story looking back? The answer is, I should have bought more. I wish I went heavier. I wish I didn't sell out. 1929, the Great Depression. After rising from 63 points in August of 1921 to 380 points by September of 1929, the Dow started to then descend, putting it mildly. The Dow ended up collapsing 13% on Monday and almost an additional 12% on Tuesday, and by mid-November, the Dow had lost half of its value. 1987, Black Monday. On Monday, October 1987, the Dow plunged nearly 22%. By November of 1987, major indexes had lost more than 20% of their value. The financial crisis of 2008. The Dow rose to 14,164 points on October 9th, 2007. By September of 2008, major stock market indexes had lost almost 20% of their value, driven by a debt-fueled economy. The Dow would eventually fall 54%, bottoming out on March 6, 2009. What do all of these crashes have in common, besides pain, losses, panic, and unfortunate events? Each time, the market returned to all-time highs. Regardless of how many dark clouds were in the sky at any particular time, at a certain point, the rain passed, the storm ended, and the sun came out shining again. The Great Depression, Black Monday, and the financial crisis of 2008. Each time, the United States markets recovered. So what exactly makes this time different? Is there reason to believe that the stock market will never recover? Well, there really isn't. The only situation that comes to mind where it is possible the United States economy would be completely ruined was March of 2020, the beginning of the coronavirus pandemic. During this time, there was talk of the economy being closed for 3 years, and there was talk of the world losing a significant portion of the population. This once-in-a-100-year health event was the time where it may have made sense to sell everything, and even then, the United States prevailed. Moral of the story, if you're young, 20s, 30s, 40s, and you have many, many years to go before you are going to need to tap into that money, just continue to buy and hold. Dollar cost average and buy and hold. Regardless of how much fear CNBC puts into your head about the Federal Reserve raising interest rates, or CNN advertising the crisis in Ukraine, or the local news showing inflation going wild. As long as you continue to buy great companies or funds that you believe in over the long term, you will be rewarded in the long run. And for those of you that are scared, for those of you that stay on the sidelines, and for those of you that are not willing to take that risk, I hope that you do not look back in 5 or 10 years and say, what was I thinking? I should have bought in.